Oh no, I sniffed it. I'm going to study and then take an exam. It's very weird. This is not how we're supposed to do it, but due to weird circumstances, I'm now going to be taking this exam from home instead of at school. So anyways, and the exam will start at 10:58 and it's already 10:10. So all I'm going to do is just study these pictures I took earlier. And then once I'm done studying those, I'll probably just stop the video and then just do nothing until the exam. Oh jeez. Oh jeez, let's look at all that stuff. Oh my gosh. Okay, cash. If unrestricted, report as cash. If restricted, identify and classify as current and non-current assets. If it's restricted cash, you do not classify it as cash. You classify it as restricted cash. Alright. Whoopsies. Petty cash and change funds. It's reported as cash. Short-term paper, cash equivalents. Investments with maturity of less than 3 months, often combined as cash. Short-term paper, investments with a maturity of 3 to 12 months, you do not report as cash, you report it as a temporary investment. A post-dated check, and IOU, receivable. Oh, yikes. That was funny. Oh, jeez. Travel advances and receivables. Postage checks and IOUs and travel advances are receivables. Postage on hand. Prepaid expenses. Oh, jeez. We never had any example problems with that one. But anyways. Oh, jeez. Stupid Snoopy. Bank overdraft. Is current liability. Compensating balance, cash separately classified. So basically, dang it, man. Dang it. Dude. Like, a couple of these are, like, weird. A couple of these are, technically they're cash, but they're not quite cash. Like, what are you supposed to do? Okay, this one is so easy I probably shouldn't even study this. Earnings per share. Because I've done so many problems with earnings per share. I don't need to memorize. I already have it memorized. So, so let's get rid of that. Hey, got rid of all of them. Come on. So, now, oh jeez, accounts receivable turnover. Oh no. Okay. Oh. Oh no. Dude, we barely did any problems. Well, yeah, we did some problems with that. Oh, come on. Also, I wish it was open book. And I wish the teacher would specify. Technically, it's very weirdly in the syllabus. Very weirdly. It says, do not use any outside resources for this test. But that doesn't clear up anything, because does that mean that certain resources are allowed and certain are not? No. Accounts receivable turnover is net sales divided by average net accounts receivable. Dang it, my nose is still stuffed. Dang it. Net sales divided by average net accounts receivable is accounts receivable turnover. Then divide that number by, do 365 divided by the number to get the days. What is this? Wait, what? What is this? Oh, yeah, this. So if you sell accounts receivable, hey, everything. Probably what I'm going to do is just simplify my life and do the calculation of cash as the last calculation, because basically I'll have everything else except for cash calculated. And basically what we want is to get, we'll just have to do these minus these, and that will be the cash, right? Because 506,000 minus 46,000 is 506,000 minus 46,000 is 460,000. Yes, so just for the cash, just do these two minus these two. But do from factor. And then loss on sales rules is the finance charge plus what? The finance charge plus the recourse liability, I think. So, because like in the example problem, the finance charge was 50,000, and then they add recourse liability, and that will be the loss on the sale of receivables. And also you have to remember which one is debited and which one is credited, because I'm an idiot. So cash. So like they receive cash, they receive accounts receivable due from factor. And the loss on the sale of receivables is a debit, because every loss or expense is a debit. A loss or an expense is a debit because it decreases stockholders' equity, which is debiting stockholders' equity, so I hate myself. That was funny. And then accounts receivable, you are decreasing accounts receivable, so therefore you are credited. And recourse liability. So just memorize that cash due from factor and loss on sale of receivables are debited, and accounts receivable and recourse liability are credited statements. And they will give you the finance charge. Okay, so they will give you the fact that the factor will retain this amount, so that's this number. They will have the finance charge, and they will give you recourse liability, and then you'll add the finance charge and the recourse liability to get the loss. And you'll put the amount that you sold here, recourse liability here, and then you will do these two minus these two and get cash. Dude, what are we going to have a retained earnings statement? So basically they say to do retained earnings January 1 as reported. Also, something I cannot forget to do is to calculate tax net of these amounts, certain amounts net of tax, because that's often something you have to do that I always forget about. You have to always take into account whether or not it's taxed, which is the most annoying thing ever. Correction for depreciation, correction for errors, then retained earnings, January 1 as adjusted, and then add net income and less dividends declared equals retained earnings December 31st. Well, if you give us time, I would do the proper indentations for a while. I'm even supposed to remember that anyways. Yay, all the studying is going to be pointless now, isn't it? It's going to be completely useless. No, it's not. I'm going to actually increase my score directly as a result of studying these things. So I'm going to close my eyes and tell you what to do for a statement of retained earnings. You do retained earnings January 1 as reported, corrections for errors, retained earnings January 1 as adjusted. And then add net income, subtract dividends declared, retained earnings on December 31st equals. So that's pretty easy. Oh wow, it loops. I didn't know that. That's cool. Okay, so cash is cash, but if it's restricted, you have to separately classify it as restricted cash. Oh, jeez. Oh no, oh no, oh no. I don't want to open the textbook. If it's restricted, you cannot include it in the cash amount. You have to. Dang it. Yeah, but you don't count it as cash. If it's restricted, you count it as something else entirely. Fine, I'll look it up. Jeez. It's just such a pain to open our textbook. Like, look how long it takes me to open this. I guess I wasn't that long. Shut up. I need to know, do you classify cash as cash or not? It doesn't even really explain it that well in the table. God dang it, man. Where's the stinking example? Okay, here. But when they are material, they segregate restricted cash from regular cash. See, look, it is separate from cash. See? They don't even... Literally just this. Okay. So it is separate. It's completely separate. Okay, I didn't even take that one. Restricted cash is separate from regular cash. Petty cash and change funds are reported as cash. Short-term paper, if it's less than 3 months, then it's cash equivalent. If it's 3 to 12 months, it's temporary investment. And if it's... Okay, so post-dated checks, IOUs, and travel advances are receivables. Post-dated checks, IOUs, and travel advances are receivables. Postage on hand. Hey, Sniffy. Sniffed. Okay, postage on hand is prepaid expense. Dude, what if we have a question about that? Bank overdraft is current liability. Oh, man. If right of offset exists, reduce cash. Dude, what if we have a question? Compensating balance is cash separately classified as a deposit, maintained as a compensating balance. Again, this is the same thing as restricted cash, basically, right? Well, not the same exact thing, but it's separate from cash, so dang that, right? Of course. Okay, what is accounts receivable turnover? It is net sales divided by average net accounts receivable. And then 365 divided by that number is equal to days. Accounts receivable turnover is net sales divided by average daily accounts receivable. How do you do a factoring thingy? You do cash. Cash due from factor, loss on the sale of receivables are debited, and you credit accounts for notes receivable and recourse liability. And the due from factor is given in the question, and the loss on sale of receivables is equal to the finance charge plus the recourse liability. So dang my life, of course. And then to get cash, just do those two things, these two things minus these two to get cash, because I mean that's not technically how you're supposed to do it. But basically, you're gonna have 500,000 minus due from factor minus the finance charge. So, but you could also do these two minus these two to get the same answer. So, anyways, oh man, dang it. Studying is fun. Statement of retained earnings is retained earnings as reported on January 1st. Corrections for corrections, and then retained earnings as adjusted January 1st. Add net income, subtract dividends declared equals retained earnings December 31st. Okay, that's not as bad as I originally thought. It's pretty logical. Although it's intuitive. I don't feel like studying anymore. I feel like I'm good. Postage checks and IOUs, travel advances. I feel like those three things I'm going to somehow forget what they are, but they're receivables, so dang it. Postage on hand, prepaid expenses, which is classified as an asset, right? Or it can be classified as office supplies. Either way, they're assets, which are not cash, which is the main thing. Bank overdraft. Current liability. And if right of offset exists, reduce cash. Compensating balance, separately classified cash as a deposit maintained as compensating balance. Now, I'm probably not going to remember the exact names of this stuff, and I'm going to get points off because I didn't use the correct terminology or something like that. Deposit maintained as compensating balance. Like, I'm going to use the wrong terminology for all these questions. Like, I was assuming that we were going to have something on our, online course. Our test was going to be on an online course, but then he sent an email that seemed to imply that it's going to just be an Excel workbook that we're going to fill in for the answers to. Although maybe he will give us some things on the Excel workbook, or maybe he will give us literally nothing, and we're just going to have to come up with everything ourselves and probably use the wrong terminology for half the stuff. Because I'm not really memorizing the terminology, I'm just memorizing the concepts themselves. Oh. This is the last time I'm going to be studying this thing, and I'm going to stop this. Accounts receivable turnover is net sales divided by average net accounts receivable. Do 365 divided by that number to get days. Do the sale factor. I don't even remember what it's called. I don't remember what it's called. I probably should know these terms, but the professor is not having us do a multiple choice test where we have to know terms. He's having us do 4 problems on an Excel worksheet, so it's probably, I might need to know some terms. I don't know. Cash due from factor, loss of sale receivables. Yes. And then this, I think I'm. See, it took me 20 minutes to actually memorize that stuff. So, and we have a little bit of time left. Let's just look at this email. he will release a Word file with the questions and an Excel workbook that you can complete. So that's why I wanted us to use a dual monitor. Because we would have the Word file in one monitor and the workbook in another. Well, too bad. I'm at home. I'm not driving all the way to school, and I feel much more comfortable doing it at home with one monitor than I would be driving all the way to the campus and taking the test in the library or something. So anyways, our test is in 28 minutes. Oh my gosh. Oh my goodness graciousness. I bet I'm not going to finish it in time. Oh my gosh. Dude, I wonder how many people are going to send him questions. You know what would be cool is if he had a Zoom call open and then people could ask questions in the Zoom call. But no, that would be dumb. Like, if a lot of people have the same question, he should like post an email everybody again or something with the answer to the question. But anyways. Oh my gosh. So nervous for this exam. This is basically my first... Oh wait, no it's not, because I took a business analytics exam a couple days ago. So this is my second exam of the semester. I have no idea how well I did on that business analytics exam. When is my professor ever going to grade that? She never even responded to my email, which was like a week ago. And she hasn't posted the next solutions to the next homework assignment. It's like she's been completely absent from her class for like the past week. But anyways. That was funny. I'll just do nothing for 20 minutes and then take the test. Oh no.